What's next for markets?
I'm Michael Kantrowitz, Chief Investment Strategist at Piper Sandler, where I lead the portfolio strategy team, recently ranked #1 on Wall Street in the 2024 All-America Institutional Investor Research Survey. Welcome back to What's Next for Markets. Markets are whipsawing, policy shifting by the hour, and narrative volatility is running rampant. Today I'm joined by Josh Rogin, lead Global Security Analyst at Washington Post Intelligence. Since 2016, Josh has served as a columnist for the Global Opinions section of the Washington Post. He's also the author of Chaos Under Heaven, Trump, Xi, and the Battle for the 21st Century, published in 2021. In today's conversation, we break down the real story behind the headlines, the power struggles, the fractured alliances, and the rising risks markets have yet to price in. From the chaos inside Washington to the high-stakes showdown in China, Josh brings a frontline view of how global politics are bleeding deeper into financial markets than ever before. If you want to understand the real forces driving volatility and where things could go from here, you'll want to hear this. As always, joining the conversation is my partner, Stephen Gregory, who leads the quantitative research team at Piper Sandler. Let's jump in. Good morning, Josh. Good morning, Stephen. So great to have you on, Josh. Been looking forward to this for quite some time. You are an expert in an area that investors are highly focused on and will likely continue to be so for the foreseeable future. Josh, you were recently named lead global security analyst at Washington Post Intelligence. Can you tell us a little bit about that new role?
Sure, Michael. Thanks for having me. We live in a time of unprecedented volatility, unprecedented uncertainty, unprecedented grift and corruption, and unprecedented policy and political change. And all of those things are forcing the long-held silos between sort of the Wall Street analyst community, the DC analyst community, the Silicon Valley analyst community, and analyst communities all over the world in various capitals to break down those walls and deal with each other. Because now, more than any time, at least in my lifetime, what happens inside the hallways of Washington, boardrooms, meeting rooms, congressional hearings, and the White House halls especially, affects everybody more than ever and more often than ever. And so the premium for political and policy intelligence, and this is the thesis that we're building this business on, is that premium has never been higher. And that's not a great situation for a lot of these investors and for a lot of these industries, and for a lot of these foreign countries. And nevertheless, there are lessons to be learned from what happened in the first Trump administration. And that's what I did in the first Trump administration. I spent 4 years mapping the factions, how the bureaucracy interacts with the political layer, how the factions change over time, how Donald Trump's decision-making process works, such as it is, and how that interacts in many cases with what's coming out of Wall Street or Silicon Valley, or who's calling him on the phone, or what's coming from Congress. And what the biggest insight that I can give in your audience, Michael, is that there is a method to the madness, but that method changes. And what that means is that the types of information that matter are consistent, but the ways of getting that information are always changing because the personnel are always changing. So it just requires to have a plug into Washington that's better than the next guy that's sitting next to you, that's better than the guy that you're competing against. And that's what we're trying to offer. That's the whole premise of Washington Post Intelligence. And and we can take that in really any direction of analysis that you want.
Right, great. That's super helpful, and certainly agree. We've spent more time on policy as a strategist. We have to know a little about a lot. And over my career, policy is just becoming an increasingly important part of the investment decision process for analysts, for investors, and obviously for CEOs as well. And so can you give us a little background on your process? What are the type of people you speak with? And in terms of getting information, and to which people are you providing that information? Who's your audience?
When I talk about mapping, in the first Trump administration, especially when it came to my focus area, which was the U.S. China relationship, but you could really apply this to any regional or functional area. It's factions. There are teams, and those teams don't necessarily fall upon the lines that you might predict. And the factions form what I call assorted alliances based on overlapping interests on an issue-to-issue basis. And those factions change over time as people get fired, and a rolling round of political purges takes out people on either side for whatever reason. And we're seeing all of that this time. The factions are different. The people, the personalities are different. But the basic constant churn of people trying to find other people inside Trump's orbit to get enough momentum to get into Trump's ear, to win the day, and then hope they don't get squashed the next day. That's the first thing, is you have to figure out who's working together on what. And some of those people will be like these MAGA world people like Steve Bannon, and some of them will be the sort of tech oligarchy, Peter Thiel, Elon Musk world. And some of them will be Trump's buddies who call him on the phone late at night, Steve Schwartzman and other titans of industry who have their own, Steve Wynn or whoever it is. And then you have the people who actually work in the government, who often are the last to know about these things, but they also have their own levers of access to the president. And what they do is they're also trying to manage down into the bureaucracy. So you have to do constant mapping of these things to understand who's saying what and whether or not that will matter. And that's a very time-intensive task, because you have to know people in all of these different nooks and crannies of Washington to get that information. And the problem, I think, not to be critical of anyone in particular, but I think a lot of the Wall Street analysts who are trying to track all this stuff, they have sources, but they're not professional analysts or journalists who are vetting those sources. They're regurgitating what those sources are saying. So you're getting lots of, especially this week, you're just getting a lot of very well-connected Wall Street guys who either think they have the president's ear or they think they have a really great source inside the administration. They probably do, but that's just one source. And so that's why the markets are jumping up and down based on one tweet or this tweet. So, oh, this guy seems reliable. He's got a real source. But as a journalist, I'm here to tell you one source is not enough. And especially in this environment, you got to have a lot of them. And so I think we see a lot of trial balloons. A lot of these tweets are people trying to either communicate to Trump through the media, and some of them are trying to game the markets for their own corruptions, and some of them are genuinely trying to call balls and strikes, but they're just not seeing all the different parts of the elephant at once. And that's chaos. That's information chaos. And finding the signal in that noise is a constant, grueling task that most people I see, at least on the TV side of the Wall Street analysis, are just not committed to putting in the spade work to do.
No, this is another great example. One of the things that Stephen and I know both love about what we do is that we get to learn about so many new things as the backdrop in the economy and policy and financial markets have evolved. My career at this point, a little over 20 years, most of it's been post the GFC, Great Financial Crisis. And so that really reset the playing field for most investors and policymakers. And we all had to kind of learn along. We all had a learning curve. We all had to walk up together. And one of the things that always gives me a bit of a giggle is that it seems that almost every 6 months, maybe even more over the last 15 years, some major global issue has come up that either has never happened or hasn't happened in a very long time. And within 2 months, everyone has a PhD in that topic.
Right.
And now, I don't know if you missed it, Josh, but yeah, everyone has PhDs now in global trade negotiations and what tariffs are and how they work. And inside the mind of President Trump, in post-GFC world, it was the European Union, how they were going to devolve. During 2015, oil prices were crashing and everyone became an expert on how the oil industry worked. So this is just another one of those examples where I agree there's a lot of noise, there's a lot of superficial information, and the barriers to information sharing have just gotten lower and lower. But yeah, it's gotten noisier and noisier, which has made markets more and more myopic. And it creates opportunities for us to be able to connect with someone like you, who's got a lot of experience in dealing with topics like these and understands the importance of corroborating sources and data alongside that. Again, super excited here. I want to give a gratuitous mention to the book you wrote in 2021, which could have been written today. And maybe you're thinking about version 2, Chaos Under Heaven, Trump, Xi, and the Battle for the 21st Century. And so that was about the first administration, Trump administration, and the shifting policy, the shifting of what had been a pretty stable policy engagement backdrop to something more strategic, and has really, again, leveled the playing field and created new learning curves and new outcomes. And so from what you wrote in that book, and maybe you can give us a quick synopsis, how have your thoughts evolved, and how are they changing near term?
Yeah, no, I agree with everything you said, actually. I think that what's different, let's start with the book. So, what I did with the book was to describe how what we saw in the headlines in terms of the trade war, the technology war, and the overall shift of the United States foreign policy aircraft carrier in a different direction towards a more competitive and even confrontational strategy against our only real peer competitor, China, how that really happened and played out inside the administration and around town. And at that time, the factions were, roughly speaking, national security hawks versus more engagement focused Wall Street guys. And that was essentially, for the sake of time, I'll simplify it, the fault line. It was Mnuchin's versus the John Bolton's and Mike Pompeo's and Mike Pence's. And then Trump was heavily influenced by guys like Steve Schwartzman and Steve Wynn and Adelson. And that was the basic thing. And that's different now in a really important aspect, in that you have what I think is the most hawkish regarding China economic team from jump that we've ever seen. And we could debate whether or not Scott Bessent, Treasury Secretary, is hawkish or playing a hawk on TV, and we can debate whether or not Howard Lutnick understands the hawkish things that he's saying on China. Some people don't think he seems to. But overall, and there are fault lines inside this administration. Elon Musk, who's not hawkish, et cetera, and Peter Navarro doesn't agree with Scott Bessent. But overall, strategically, when you think about the need to have some big sort of competition and confrontation against China economically, for whatever reason, they're pretty much in lockstep. They're just not in lockstep on how to do it. So that's one big change. The other big change, I think, is that in the first administration, and this is what the book describes, you had a very slow play out of all these dynamics. And you had Gary Cohn and lead an effort to engage with China, while the hawks like Peter Navarro sat back and let it fail over the process of months. You had early engagement with the Chinese leadership at Mar-a-Lago, and then you had a series of negotiations which failed. Then you had tariffs. Then you had sanctions. Then you had export restrictions. And then all of a sudden the hawks were like, oh, this is great. We're going to decouple. And then Trump struck a deal. And so then a lot of those things, some of those things went away. And then we had a détente. And that détente lasted exactly 2 days, because the deal was struck on January 15th, 2020. And this is a great scene in the book, by the way. And 2 days later, COVID hit. 2 days later, we found it. And then everything changed. And Trump and Xi's relationship dissolved. And all of a sudden, the hawks were back. And Trump said, do whatever you want to China. I don't care. And then we had a situation where Larry Kudlow and Robert O'Brien, the national security advisor, got together and had the most hawkish year of Chinese economic warfare against China economically that I've ever seen, that I think we'll ever see. That's when we started to get into the capital markets. That's when they started to mess with the TPS and CalPERS and the PCAOB and all of those sort of things that all of you guys on Wall Street think you're doing to manage the U.S. China capital relationship that most of us here in Washington think are all nonsense and really just paper over a lot of really horrible structural issues in our U.S. China capital markets. So we can get to that if you want to, but I never saw in 20 years anything happen on that until the pandemic hit, because then there was no incentive to hold back. So the point is that all of that played out over 4 years, and now it's all playing out over 4 months. And that's crazy, okay? And so what does that tell us? What tells us that Trump's not patient, okay? He's not going to go through 3 years of this and that and see what happens. He wants it all done now. It's not just China. He wants the Ukraine war to end right now. And the problem with that, of course, is that none of these other actors, especially none of these other countries, are going to agree to that. Because why would they? Because it's the absolute wrong way to negotiate. So all we've really seen ever since Liberation Day is the Trump administration negotiate against itself. And if you're on the other side of any of those negotiations, why would you do anything at all? You don't have to be an analyst to see the obvious fact that if you're a negotiating partner negotiating against himself over and over, you might as well just wait and see what happens. And then, of course, you have all of these allies. And we had competitive tariff and trade protectionist measures in the first administration against the EU and allies, and deals were negotiated. I'm thinking about Japan and South Korea right now. And now Trump is saying all of those deals are no good. You got to give us better deals. And that, of course, our allies are like, okay, what do you want? And then the White House says, we don't know. What do you want to give us? And then they're like, we don't know. What do you want? We don't know. What do you want to give us? Okay, see you later. That's what happened this week in Washington. We had
Yeah.
The World Bank IMF spring meetings, which brought finance ministers from every country in the world within 3 blocks of the White House. Okay. And they took a bunch of meetings. They're trying to get 90 deals in 90 days. They got 0. And all of these diplomats and finance ministers, every single one of them said the same thing. They're like, we can't even talk to these guys. They have no idea what they're doing. They have no idea what they want. So that's what I talk when I talk about an unprecedented level of uncertainty and volatility. That's the big difference, is that the chaos of 4 years of Trump in one has now been shrunk into 4 months. And they don't know what happens tomorrow. They have no strategy. It's obvious they have no strategy because the strategy changes every day. And that kind of improvisation may work out. If you talk to Trump economic officials, they'll say, hey, don't be so pessimistic, Josh and Mike. Why are you being so negative? You must hate Trump or something like that. And what if it all works out? Then you're going to look like an idiot. To which my response is, A, that's a hell of a risk to take with the global economy and on a whim. And B, going back and forth in this kind of knee-jerk reaction and dragging the whole global economy with you has horrendous long-term and short-term consequences for real people who suffer because of the collateral damage.
Absolutely. And it hasn't been going on long enough, though it feels like it's been 4 years, not 4 months.
We're only starting. Exactly.
Yeah. And the financial markets, investors have gotten really pessimistic about the economic outlook. Yet the week we're speaking now, the markets have rebounded really sharply during this week because of a bunch of, again, comments about the administration's made about the dollar and about Chairman Powell, and things are going great and they're working well and we're getting closer to all these deals, yet nothing's been announced. So the markets have been extremely volatile because that's all they have to go by. And this hasn't been going on long enough to really show up in the economy whatsoever. We're in the middle of earnings season right now, and companies are reporting earnings from what happened in the first 3 months of this year, where, which was all before Liberation Day, before investors got a real dose of reality. And so clearly markets underestimated what Trump's plan is. Investors are polarized between the view that this is the art of the deal, this is 4D chess, versus exactly what you just said. There is no plan, there is no goal, and the policy is changing by the day. And so one question we get a lot, which I'd love to get your insight on, is how long is this going to go on for? How long is this elevated amount of uncertainty, which is absolutely freezing the global economy, going to persist?
I think that's the key question, because I think there is a goal. I think there's no plan, but there are goals. There are objectives. And I think, again, once you get past the headlines, for investors, it's really important to know what those objectives are, because that is real information and that will guide their decision-making, even if we don't know what the decisions will be. And so when I talk to White House officials, Treasury officials, commerce officials, they describe broad objectives, right? And they're not necessarily consistent, but one is the onshoring of manufacturing. So if you think about that's a real objective. That's a campaign promise. That's a political necessity for the president, and will factor heavily into 2026 midterm elections. And so he's got to make progress on that. And so that's why he's always announcing these $1 trillion deals, and whether they exist or not. And that's why all of the things that he's trying to extort out of these foreign countries really involve investing in American manufacturing to shore up certain key sectors that he thinks are his key political constituencies, whether it's autos or steel and aluminum or just manufacturing in general. Like, ignores the stuff about the socks, underwear being onshored and the bananas from Brazil being onshored, because obviously that's not going to happen. They know that, even though the haphazard way in which they set up the tariffs didn't reveal that kind of nuance, obviously. In the end, everybody knows where the onshoring opportunities are, semiconductors. Now, so that's a really good sort of lodestar. Now, if you're asking me personally, do I think that like killing the chips bill and then trying to strong arm Taiwan into paying for their own economically disadvantageous move of all of their supply chains out of their own protection? No, I don't think it's going to work. So we can look at the ways that they're trying to get to their objectives and say, I don't think that's going to work. Analytically, I don't think it's going to work. But that's a really big one. So that's one. The second big long-term objective, and this will get to your questions of what are the dates to watch. So onshoring of manufacturing has a pretty good timeline, because he said 90 deals in 90 days. So That takes you what? To mid-July, right? Roughly, okay? Now, revenue. So they need the tariffs to produce revenue. Now, again, if you ask Navarro, is it about revenue? He'll say no. If you ask Besson, he'll say no, or no. But if you ask Trump, he'll say yes. But are we trying to get revenue out of those tariffs? That's what the president says, so that's an objective. Now, what does that mean? To me, that means that those 10% broad-based tariffs are here to stay, because that's the revenue. That's the constant revenue. And now, again, will it work? Will it actually produce the revenue? I don't think so. But we're trying to understand the mindset of the people who are making these decisions. That's a really important one. Now, how long is that relevant? It's irrelevant exactly until the moment that they pass the tax bill, and not a moment after. Then they don't need to show revenue, because they're going to try to claim that this is revenue to offset whatever tax cuts they're going to have. Again, it's not true.
Yeah.
It doesn't make sense, but that's what they think. So politically, it makes sense anyway. So when does that? Mid-July, right? There's a congressional recess starting in late July. If it goes to September and October, that's a really bad idea. They got to get it done by mid-July, by the time they leave town. That's basic congressional calendar stuff, okay? So if you look at the deals and then you look at the tariffs and you look at it's all around mid-July. So I think that's really the point that a lot of people now, you tell me, because you know this better than me, is that when the stocks run out? Is that when these companies who have warehouse supplies in anticipation of the whatever it was, they run out of their pre-positioned supplies? Is that when the supply chains break down? Is that when all the ships that were going to be sent are going to be sent? Is that when the small businesses who can't get stuff from China cheap anymore are just going to have to fold? A lot of people say that I talk to, that's about 2 to 3 months. Mid-July, right? So there's a perfect storm happening in mid-July. Now, that's a snapshot analysis, because everything could change tomorrow. And what I think I'm seeing right now is that Trump's going to climb down from a lot of this stuff before then. And I think the tax bill will get passed for sure, and probably in that timeline. But what will it look like? And then the other thing I think people should just take a very close look at is when the federal budget comes out, because if you want to know the Trump administration's priorities, they're all in there. And also, we're waiting on a lot of people inside the Commerce Department and the Treasury Department to take up their posts. And that's really important, actually. We have a CFIUS process that's not functioning right now because no one's in charge of it. But that's a big thing. We have the SEC and the FCC and the FTC all threatening all of these anti-competitive against China measures, but we don't see them. We've got an America First investment policy. I don't know if your investors have even read this. It was put out by the National Security Council. It's pretty interesting. What's in there? Outbound investment restrictions targeted on China. It doesn't say China, but they're targeted on China, using all sorts of new tools. You can use IEEPA, the sanctions bill, for tariffs. It's controversial. Maybe it gets challenged. Maybe the courts knock it down. Maybe they don't. Maybe it goes to the Supreme Court. Maybe it doesn't. But what about using it for outbound restrictions? That's a whole nother mess. But that's in the document that no one read while we were talking about invading Greenland. But will that actually happen? I think it's going to take a few months to play out. So there are a lot of bouncing balls to watch. But I think by mid-July, if there's a stabilization to be had, that's when we'll see it.
So if you're talking about mid-July and how some tariffs potentially are going to be on for revenue sake, for budgeting reasons, what are some of the scenarios you potentially see for how tariffs play out in terms of the optimistic they'll go away to they're on for good? What are some of the potential outcomes? Because that seems to be a lot of what investors are trying to game out.
Yeah, that's a great question, Stephen. I think when I think about that, I think about it on a country-by-country basis. And I put these countries into three basic categories. One are countries that are allies, that have an incentive, that are mostly more or less democracies, and that have not only great relationships with us, but have the first mover advantage, because the best deals go to whoever shows up first. And amongst those, the most important ones are the ones in East and Southeast Asia and South Asia. So this week, they spent all of their time with the Japanese. It didn't work. And the Koreans were here, and the Indians, they might get the first deal, actually. So I think of them as a category for two reasons. One, because they have the first mover advantage. Two, because they have a big disadvantage, which is that they have to respond to their own domestic politics. Yeah. Most of them already have trade deals that they don't want to set a precedent of renegotiating anything they already negotiated, since they negotiated it with Trump. So how can they sell to their constituencies that this Trump deal will stick more than the last Trump deal, which this Trump deal is undermining? And so in a way that they have a huge disadvantage. And I think what's going to happen with them is that they're going to end up making more agreements amongst themselves. I see a lot of chatter, a lot of interaction between Australia and Canada and the EU and Japan and Korea amongst themselves, not with us. It's like when we pulled out of TPP, they just did it without us. So we're going to see a convergence of interest amongst quote unquote Western style democracies to get to the front of the line. And if they can't do that, then cut their own deals to hedge. The second category are countries that we can step on who are dictatorships who can just bribe us. And Vietnam and Cambodia come to mind, okay? Because no one should be surprised that we can lean on Cambodia and Vietnam because they're poor countries. And there's no conception of them being able to buy enough stuff to even out their trade imbalance with us buying their textiles. Because what are they supposed to buy? They're poor countries. They don't have any money. I don't want to disparage them, rooting for them. Don't get me wrong, but you get my drift.
Yep.
So their disadvantage is that they can never do the thing that Trump wants. They can't build chip factories in Arizona, and they can't buy enough widgets from Michigan to make up for the bananas they're going to sell us. So that's their disadvantage. But they have a huge advantage, is that they're not democracies. They can do whatever they want. They can just bribe the crap out of the Trump people, the family. And again, I'm not endorsing this. I'm not recommending this to all you investors out there. Be very careful before you go down this path, because I see a lot of CEOs, especially in Washington, asking their general counsels, where's the line? How much can I bribe these guys? Their hands are out, and some of them are crossing that line, and some of them aren't. And the repercussions won't come because there's no Trump administration has dismantled all of the oversight and law enforcement mechanisms that would catch all of this public corruption. But what if they're not there in 4 years? Will you get a pardon? I'm pretty sure they're going to get pardons. Are you going to get a pardon? I'm trying to say anyway. Don't go there. But analytically, yeah, that's what Vietnam is doing. They're going to build a tower in Hanoi. It's going to be crazy if it actually happens. Again, I don't think it's going to work, but that's their strategy, is to bribe and hope that gets them out from under. And then, so that's the second category. Third category is China. That's its own category.
Yeah.
And we can take that in a lot of directions, but the U.S. China relationship is the most important bilateral relationship in the world for the rest of our lives. And it's the economic de-risking is ongoing and it's likely to speed up. But as it does that, Xi Jinping has a unique set of tools and a unique situation of resilience. And he has something that President Trump doesn't have, which is a thought about what happens like next week. And in this environment, that's a huge advantage for them. We have our own advantages, of course, but right now it seems as if the Chinese strategy is to step aside while we hurt ourselves. And I don't necessarily blame them for that.
That's incredibly interesting in that as investors, we always try to fit things into a box and everything's binary. So the fact that there's these different categories and it's very country specific, I think is a great takeaway. And then the other thing that we as investors do, we think very short term, days, months, minutes, at most a quarter. And you mentioned China here and that being this own category. Can you demystify the timeline of how a trade deal could transpire? We're always looking for historical parallels. What are the milestones? What needs to happen? And I feel like that's also really topical this week because you have certain parties saying we are talking, we aren't talking. So how do these things work?
So there is no historical precedent for what's happening now in the U.S. China relationship, but there are patterns. And what I mean by that is that when I interviewed President Trump about this issue, and this was in 2021, so he was out of office, but recently out of office, what he said was not at all what any of his officials have ever said on the U.S.-China economic relationship. What he said was, we were so close we made a deal, we almost solved the problem, we almost avoided the Cold War, and if pandemic hadn't struck, I'm paraphrasing lightly, but this is basically what he said to me, that deal would have stuck and we would have avoided the Cold War and we would have had what essentially is a new model of great power relations with the United States and China. And that roughly is Xi Jinping's strategy. If you look back to 2012, right before Xi Jinping came to office, he's been talking about it for that long. Essentially what he's calling, what some people call a G2, where the US and China divvy up the world based on spheres of influence. And you could add Russia. Maybe in Trump 2, you could say US and China and Russia divvy up the world into 3 spheres of influence. And they agree to non-interference in each other's sphere to a degree. And then they divide the spoils. And the rich get richer and the poor get poorer, and might makes right, and those who don't like it lump it, okay? Now, I went through that to emphasize Trump's personal view, because what I think is different in Trump too is that his personal view reigns. And anyone, even the people who disagree with him, are just trying to craft their plans and schemes into reaching that view. So again, I don't think it's going to work. My personal analysis is pretty well established on this, even, which is that that's impossible because Xi Jinping's goal is not to have peaceful coexistence. It's for China to be the preeminent power economically and militarily, first in the region and then in the world, at our expense. In other words, that they mean us harm, that there's no balance of power to be achieved, and therefore we should understand that and plan accordingly. But that's neither here nor there. To answer your question directly, how will this happen? What it means is that they will get to a negotiation. Everybody knows. And all of these things from China's perspective are preparations, staging for that negotiation, filling a quiver with arrows, huge piles of carrots, huge piles of sticks. And I think their retaliation is calculated that way too, because the things that they're doing to retaliate for our very broad and crude tariff policy, even in the first administration, the tariffs were and the export were very intentionally crafted, focused on high technology, adjusted over time based on what was going on, and strategic, and not always, but to a degree. But now 145-degree tariffs on trinkets and widgets and bicycles, and it's just crazy. So the Chinese are being a lot more deliberate because they're preparing for this negotiation. Now, again, when does that happen? We thought that it would happen after President Xi and President Trump met in June alongside, I guess, the international conference that they were scheduled to both be at. And right now, it seems that Xi Jinping is giving President Trump the Heisman because he doesn't want to give up any leverage in advance of that meeting. But that's what I think is going to happen. I think it's the G20 in Argentina. Anyway, there's a very big upcoming international summit where I think they're going to meet. That's what I think. That's when this all starts. And so they're going to meet in person. We had a great meeting. Everything's going to be copacetic. Now we're going to delegate our envoys and our teams. And this reflects not the Trump style, but the Chinese style of setting up any of these things, which is that there has to be intense preparation. Then there has to be a leadership level sign off. And then there has to be teams of people deployed after that leadership level sign off. That's how the Chinese operate. They're not going to change that. Certainly not for Trump. So again, June, let's say they meet in late June, then, okay, the negotiations are on, and they have some sort of partial climb down to signify the good faith of the negotiation, a confidence building measure, in other words. What does that lead to? When do the negotiations really start? Mid-July. We keep coming back to that date. So that's how I think it's going to go down. Now, what happens in those negotiations? That's probably a whole nother podcast, but suffice to say, they will be rocky, and they will go back and forth, and everyone following them will try to time them and fail to time them, because you can't. I always hear Wall Street guys like, you can't time the market, but you can't time the Trump administration. Okay. So the markets are trying to time the Trump administration. They're failing. And the investors are trying to time the markets. They're failing. I guess that's like a corollary to don't try to time the markets. Don't try to time Trump.
Yep. Yeah. Which has given us a market that goes up or down 10% in 1 week.
Right. On a tweet.
On a tweet.
As Wall Street guys try to screw each other out of money on the way down. That's what they're trying to game each other's expectations as the ship sinks. So in a competition for the lifeboats.
That's right. And everyone's talking about who holds what cards. And I think perhaps what you meant, it's not about the cards, it's about the players here and understanding how the players are going to react.
Always play the player. Never play the cards. That's the first rule of poker.
Yep. So on that, President Trump has talked about how he holds the cards with the China-U.S. relationship. And I thought you made a really good point. So I heard you this week on CNN, and you were discussing this, and you made the point that perhaps, yes, the U.S. has some economic leverage because we consume a lot of China's exports, though that in entirety, that China is probably less dependent on the U.S. than we are dependent on them. And the point you made, which I don't think is being focused on as much, is the policy resilience and how Trump has realistically not 4 years to get this done, but really 2 years to get something done. And if not shorter, because it needs to be done in time for things to recover from it before the midterms. Whereas China has arguably an indefinite amount of time and resilience from a political perspective.
So I think there's a couple of things here. One is, it's pretty clear to me, again, I'm not a market analyst, but it's pretty clear to me that the U.S. economy is more dependent on China than the Chinese economy is dependent on the United States. So from that point of view, who can last longer in a race to the bottom, it would be China. And the second point was politically, it's a socialist state run by a dictator who wields generally totalitarian power. There are internal dynamics in China. There are internal pressures. There's no democracy. But I'm not saying Xi Jinping doesn't have to respond to his constituencies. I'm just saying that push comes to shove, he can just kill them, okay? And we can't do that. So you have to understand that, yeah, if it's about who can take the most pain, Russia can take more pain than Ukraine, China can take more pain than the United States. That doesn't mean that they're going to win. It's just one of the data points. Now, what I'm focused on, and my reporting is really interesting, is how the competition for all these other countries, the frontline states in Asia, first of all, but then Europe more broadly, and then what is sometimes called the global South. And this is where the action is. This is where it will tip. Now, in any sane world, all of the countries that are our allies, like NATO allies, EU allies, Asian allies, where we have bases and relationships and trade agreements, they'd be on our side in any sane, and that would tip the balance. That would mean we would have all the leverage we need to extract the concessions that we want or whatever, or survive out the Chinese retaliation through friendshoring and et cetera. But the Trump administration decided to wage economic war on all those allies simultaneously, which to me seems pretty stupid, but here we are. And the latest iteration of that stupidity, in my opinion, is that after they decided that we're not going to do worldwide tariffs and we're just going to do China tariffs, then the next day, the message from the Trump administration was, oh, now we're going to get these Asian countries as a concession to decouple with China. And of course, all of them were like, no, that's crazy. We're not going to do that because we live in this neighborhood and they're our number one trading partner in many cases. And it's long been a pillar of U.S. policy in Asia that we don't make countries choose, at least not explicitly. Militarily, yes. Economically, no, because we're going to lose that battle because China's going to have the biggest economy in the world for the rest of our lives. And they live there. They're in that region. So obviously they can't move. That was last week, and early this week, actually, it was like, oh, let's force Japan to decouple from China. Now, the Japanese, who are the most hawkish on China amongst a lot of these countries, they can't do that. They can't justify it. They can't even talk about it. It doesn't make any sense for them. We're pushing them to do something they can't do. It's not really going to work. And then when it comes to the Europeans, all the European CEOs, investors, bankers that I've been talking to this week, and most of the officials are more dramatic about it. All of the EU officials are like, oh, we're going to break from America and you're forcing us to integrate with China. And all of the business people saying that's nonsense. We understand that the Chinese market is closing to European businesses slowly but surely. There's no way around that. We're going to try to make as much money as we can out of it as we can. We understand that we now have less leverage to negotiate with China. We might have to give up some sanctions and let more Chinese products into our markets, which is going to be bad for us. But we don't really have another option. We can't strategically shift to an alliance with China because, again, they understand the nature of the Chinese Communist Party, the character of it, which is to make China into a self-sufficient economic juggernaut that is predatory, that is economically aggressive, not economically cooperative. And they know that. The real people who are in charge of the real businesses in Europe know that. So that's not great. So their best bet is to hedge and to wait and hope that this is just a blip and that some less nationalist protectionist people come into power in Washington in 2 years or 4 years. And I don't think that's a bad strategy. And like, why would you shift everything about your economy if you don't know whether or not that Trump's plans are going to last for next week, much less for 2029? And then when it comes to the global South, I think that we've mostly already lost them in the economic competition to China. And the rate at which China's economic outreach and trade outreach and manufacturing investment and development investment in most places in Africa and South Asia is so far ahead of what we're doing and so much smarter and more effective than what we're doing that I think we're basically losing those continents in terms of economic influence. But one bit of good news is that anyone who tells you that that the RMB is going to become the reserve currency, I think is horribly mistaken because it's not a real currency. It's not a real economy. All the numbers coming out of China are suspect, and all of the ability to trade the RMB in the international market is just, to me, seems like a bizarre idea considering that it's an economy based on a lot of fictions, which gets us into whether or not these Chinese companies should be traded in our capital markets. But maybe we're going to need a whole nother podcast for that one.
Yeah, and that's been something else is coming up as a potential for delisting ADRs in U.S. markets.
Yeah, I'll believe it when I see it.
And that raises the question, between now and presumably June or July, What kind of actions do you expect to see from both the Trump administration and from China as this tit for tat goes back and forth?
Yeah, just to finish up on the capital markets piece, there's a huge push in Congress now to finish the work that was very nearly completed at the end of last year in Congress, which is to pass legislation to codify the Biden administration's executive orders and other policies to restrict high technology for export to China in key strategic sectors like AI, quantum, and semiconductors, and then to further restrict outbound investment in companies connected to those. Now, that whole effort, mismanaged as it was, is largely continued and is set to be expanded under the Trump administration. And the question is whether or not it will be implemented in a way that is effective. And I think that's an open question. And so I think what you're going to see, at the end of last year, we had something called the Coins Act, which was a compromise, which gave legislative backing to outbound investment restrictions regarding China, increased scrutiny of Chinese investments, and increased scrutiny of capital flows between the U.S. and China, which is essentially the intellectual and policy basis for what Congress wants the SEC and the PCAOB to do, which is to start admitting that a lot of these Chinese companies that are listing on U.S. exchanges are doing so with completely fraudulent documents and are doing so in ways that violate, or at least documents that can't be verified in any serious way or in any way that anyone really believes that they were verified. We could say they were verified, but it doesn't mean they were verified. And because of the nature of the Chinese system. And so that whole effort, I think, is going to have a big push in the next couple of months. Now, the thing that's restricting that is that the aperture for these types of competitive actions is still the mood of the president. The way I think of it is that when the president and Xi Jinping are on a good vibe, then competitive actions are suppressed. And when the vibe is bad, in President Trump's mind, the aperture for competitive actions opens up and people rush in. And as much as they do as much as they can until that closes again. And that's how the tectonic plates inside the government sort of shift. And so what we often track is like the weather. It's sunny outside. It's raining outside. And if you watch TV, you see a lot about the weather because you could look outside. It's important. People need to know. But what the smarter thing to track is the overall climate change, which is a lot harder to see because it happens underneath the surface, but it's actually much more important. And so don't look at the weather, study the climate change. And when the U.S. China relationship, that means as the aperture opens and closes, as the mood of the relationship goes up and down, what are the trends that show that these big generational types of initiatives, like are we really going to scrutinize Chinese investments in farmland around sensitive military sites? Are we really going to, as the FCC wants to do, put Chinese telecoms to the scrutiny that they probably definitely deserve? Are we really going to take a look at all of these unusual investment vehicles that Chinese companies use to raise capital in our markets? Are we really going to look at the endowments of universities, state pensions, institutional investors, the indexes, MSCI, FTSE Russell, Bloomberg, Barclays, and their business of increasing their institutional investors' holdings into problematic Chinese companies that are violating U.S. law and doing other horrendous things to build the Chinese economy and war machine that's pointed at us? Now, those are big things that, again, it seems like in the first Trump administration, a lot of them moved forward, and then in the Biden administration, a lot of them stalled. And those things haven't gone away. So as you're tracking the weather, just keep an eye on the climate change, because I think over time that will matter much more for investors than any particular tweet on any particular day.
China's went through an explosive investment boom in their economy. Investment got up to the low 40s as a share of GDP, I think peaked around 2011. And really since then, 14 years now, we're still waiting for China to become a quote unquote consumer-based economy. Where do you see, outside of the short-term tariff situation, where do you see China headed over the next decade?
Yeah, I think that's a really important question, because we fail to understand what Xi Jinping's strategy, we fail to understand the character of the Chinese Communist Party and what they're trying to do. And here's the crazy thing. They write it all down. They tell us, actually. It's in Chinese. AI has provided amazing translation capabilities to us now. But if you just read everything that he says and listen, and you'll understand perfectly what I'm about to tell you, which is that China's plan is to become self-resilient and self-sufficient. They will, of course, it'll become a consumer-based economy, but they don't want to give that consumer base to us, they want to keep it. So they're going to have a consumer-based economy that's served by Chinese companies. They're in the process of replacing all foreign brands with Chinese brands. So that's the first thing. If you're a brick and mortar brand in China, your days are numbered. Okay. There's no way around it. There's nothing you can do. Okay. You could kiss the Chinese government's ring as much as possible to lessen the pain for as long as possible, which I think is what they're all doing. Same thing for the manufacturing. Like it's going to get worse. Bad gets worse. That's the trajectory is going in one direction. It's down. And you can hedge, you can pay the fines, whatever these companies are doing to get out from under that trend may make sense for them in the short term. But if you're asking me in the long term, no, there's no McDonald's. There'll be Chinese McDonald's. There's no Starbucks. There's Chinese Starbucks. And I just don't see any way around that. So that's one thing. That's for all the foreign brands in China. The second thing is that we have to stop thinking about China as a second-tier technology exporter. They're, in many ways, in many parts of the technology industry, they've already surpassed us. And in some, we maintain slim advantages, which we're now undermining by gutting our research and innovation base while they're doubling down on it. And you could I don't need to explain this to you guys, but just you look at EVs. We're destroying our EV industry, and they have 150 EV companies that are going to dominate global markets for a generation. And that was smart of them and stupid of us. Batteries is another one. And I'm not worried about the rare earth stuff because rare earth materials are not rare. Okay. And that's something we can fix. Well, I don't think we're fixing it, but we can fix it. But on the innovation and high technology industries of the future, and I'm including AI, and I'm including quantum, and I'm including biotech, and I'm including pharma and semiconductors, by the way. No, they have a very clear plan to be completely reduce their dependence on us to zero and to be completely self-sufficient while not allowing us to take advantage of them escaping the middle income trap and bringing their people out of poverty. Now, China's not 10 feet tall. They have huge problems. The real estate market's all screwed up. Long-term planning is a blessing and a curse because it makes it hard to pivot. And when you have a totalitarian dictatorship run by a mass-murdering dictator, inevitably, people are going to be reticent to give that person negative feedback. So it's really hard to convince the guy who can murder you like that he should change what he's doing. So that's a vulnerability in their system. So they've got huge vulnerabilities too. It's the biggest country in the world population-wise and will be forever. I'm not saying that they're going to win. I'm just saying that if you want to understand what's going on long-term in China is that they're preparing for war, economic war. Okay. If we're not in it already, they're going to make sure that when the economic war happens, that they've got everything. Do you guys ever track China's storing of commodities? Hugely underreported story. China never had a national food bank until 5 years ago. Now they're soaking up commodities, grains and cassava and sunflower oil from all over Asia, 20 times the consumption rate to build national reserves of things they don't even need. I've been to China many times. I never saw cassava ever. But so why do they need 10 years worth of cassava in silos? It's not because to feed the Chinese people. It's to control the Asian food markets in the event of a contingency. And that could be an economic contingency. It could be a pandemic contingency. It could be a war on Taiwan contingency. But if you control all the food, you control all the prices, you control all of those countries. That's the level of strategy they're operating at. And our level of strategy is a tweet and then a back down and then 145% and 60%. It's hard to convince anyone that we're acting like a serious country in this environment. And I say that as someone who is rooting for us and not them.
What you describe is a very big turn from the 3 decades nearly of improved globalization, trade agreements, something that contributed to what people refer to as the Great Moderation in the United States. Some of the irony I see today is that the timing of these tariffs from the perspective that we just had an inflation shock and prices of everything are really high. Let's just say it's not an ideal time to do that. Last time we had an inflation shock was in the 70s, early 80s. And we essentially got out of that over many years by relying on the rest of the world to produce and allow us to import cheap goods and trade agreements that accelerated that for decades. It took a while to heal, but that's really was a trend that for 20 years was phenomenal for certainly the U.S. financial markets. And now we sit here once again with a pretty big price shock from the post-COVID world. And we seem to be pouring a little bit of gasoline on that fire. So it really makes the investment outlook quite different when looking ahead. I'll go back to what I said earlier about the great financial crisis, is that really reset things, and it made some of the textbooks that refer to as what is normal as how financial markets performed in the 80s and the 90s. And that couldn't be anything close to what has been normal since then. And what you describe ahead is quite the opposite.
Yeah, another good reason to purchase a subscription to Washington Post Intelligence, launching in mid-July. Perfect timing.
Everyone's trying to figure out where they call the Trump put, where his pain points are. And curious what you've heard on this, the 90-day pause. So the market was sharply falling. The bond market started sharply falling. Rates were going up. Wall Street generally is ruled at the end of the day by the bond market. What's your world's view on why paused?
Yeah, I don't know. I think it's irresponsible to pretend like we know. We don't know.
Yeah.
Nobody knows. And was it the Treasury bond sell-off? Was it the tweet from Bill Ackman? There's no real way to know.
Sure.
So
Yeah.
It's always a confluence of factors. But the things that in the past have influenced Trump's lurching pivots are, one, the markets, two, public opinion polls, and three, getting embarrassed by people that he actually looks up to, meaning people richer than him. And based on those three things, those are the most leading indicators. But in that instance, I don't even think the people in the White House can reliably claim to know what that pivot point is. Again, you're trying to time the markets by trying to time Trump, and it's a fool's errand.
Yeah. One of the things people freak out about is, we're going to see this big collapse in employment. And I think the way they're managing, whether accidental or purposeful, the messaging and essentially the financial markets, is it just keeps everyone frozen. Like, sure, you've seen hiring plans freeze, but you're also not going to see companies lay people off, because there's still this big idea that, this is all just a game and it's all going to go away and I can't fire anyone because I'll need to rehire them quickly.
I can give you an interesting Washington take on that, because the Washington market is a unique market when it comes to the Trump world, because the federal government's getting destroyed, right? It's getting gutted. Hundreds of thousands of people in the DMV district, Maryland, Virginia area, professionals losing their jobs with no warning, no process, in a really tight market that's already tight. And the conventional wisdom in Washington is that all of these big primes, whether it's a Booz Allen Hamilton or a Lockheed Martin or a SAIC, who employ tens of thousands of people, are going to get doged, right? That's the conventional wisdom, is that they're 98% reliant on government contracts. We're destroying the administrative state and the government, and so all those contracts will go away. And so all of these tens of thousands of people are going to lose their jobs, and that's going to have a huge second and third degree knock-on effects. I think that conventional wisdom is really incomplete, actually, because I talked to the leaders of these primes, and they're not firing, at least not yet. And they all say the same thing. They say that when the wave of Doge passes and the new titans of DC contracting are appointed, who will be, again, Trump's friends, it'll be like Oracle and Palantir and SpaceX and the politically aligned companies, contractors, they'll get the new contracts, and there are new contracts to be had. Those contracts will be huge. They'll be, imagine in the defense industry, we have this thing called Golden Dome, right, which is a $2 trillion missile shield for the United States that is, in my estimation, completely useless, a huge boondoggle. No one's ever shot a ballistic missile at the United States because it would be the end of their lives and their country if they did so. Nevertheless, Trump is determined to throw $2 trillion into this project. And whether it ever happens or not, it's going to be a huge magnet for contractors. But the traditional legacy, let's say, contracting community is just waiting, because they know when the administration's priorities come in, even if they're different than the last one, the expertise will be the thing that gets it done. And the human capital can't be easily replaced. So they're much smarter than the Doge people, because they know even if SpaceX gets a contract to build something, if all of the people who know how to build things for the government and the military are still employed by Booz Allen, then Booz Allen will have to be a subprime on that contract. So we're seeing a reordering of the contracting community, where the people who are closest politically to the White House will get the primes, but all of the ones who aren't will still get a ton of work. And so it's a very clear calculation for them that the human capital is the thing that will get them that work. So I think that's a very DC kind of specific analysis, but that's the one I have.
So it's a little different, but the same kind of game is getting played.
It's a unique game, DC, because it's an industry town and because, again, so trillions of dollars flow to the DC contracting community. And then that flow shapes a lot of different things, and those things are changing fast. But essentially, I don't see a huge reduction in government spending coming anytime soon. It'll just shift. A lot of it will privatize. And if you think about destroying the federal government, a lot of those demand signals will still be there when it's all said and done. And Elon goes back to robots or whatever. And the professional services contractors who didn't gut their stabs will be in a prime position to take advantage of that privatization. And they know that. So that they're not suffering from this disruption is that they're taking a medium-term view, not a short-term view. And I think they're right about that.
On tariffs, when this whole thing's said and done, are we better place, worse place?
It's really hard to oversimplify because the bottom line on the tariffs is that if you're thinking about the goals of the administration, again, onshoring manufacturing, they want to weaken the dollar, they want to lower rates, right? These are pretty clear goals, right? They want to increase revenue, cut taxes. Now, you could define success as them achieving their goals. And so will we be better off depends on what you think better off is.
Better
And
off
if you
is.
think the Trump goals are good, then achieving them means we're better off. Now, I'm not, without saying whether or not I think they're good, I'm going to say I think that the policies will not achieve those results. So if you think the Trump goals are good, I would say that the plan as we see it, from everything that we can see, is not going to get us there. So that would be bad from that perspective. But if you think the Trump goals are stupid and that trying to onshore manufacturing in this way is just the wrong policy, and then it fails, that's a good outcome. So it really depends on your perspective. If you're rooting for Trump's plans to succeed, I think you're going to be disappointed. If you're rooting for Trump's plans to fail, I think you're going to be very pleased. And whether or not you think that's a net good or a net bad depends on what your specific interests are. And as an analyst, I try to stay neutral on that topic.
Yeah, I'm thinking more about the ability to trade and the cost of trading and the efficiency of trading. 6 months from now, a year from now, is it tighter, looser, more advantageous to the U.S. than it was 6 months ago?
I think it basically goes back to normal with the noted exception that a lot of damage has been done. I don't think the overall system will change.
Time is a huge damage. You have capital markets that are frozen, no banking. That's the fuel for economic activity.
Yeah, I mean, forgive me for being like a Washington guy, but I'm thinking like geopolitically. The reliability of the United States as an economic partner, the reliability of U.S. trade agreements, the reliability of U.S. assets, the reliability. It doesn't mean they're going to be able to find another reserve currency. I don't think that's a real thing. It doesn't mean, I don't think it doesn't mean that all of a sudden Moscow or Beijing is going to become the global hub for transactions. I'm just saying that we'll have essentially the same system, just with a lot less credibility and a lot less goodwill. And that has knock-on effects in the geopolitical space, in the diplomatic space, in the military space. Who's going to want to buy a bunch of F-47s when they build the F-40? Yeah, have you heard about the F-47? It's because Trump's 47. They're going to build the F-47. It's the new plane, right? And it's going to have like drone swarms that come out of a fighter plane. Will it ever exist? I don't know. But who's going to invest in that if you're the leader of any country in the world? Because you're like, oh, wait, what if President Vance decides that my universities are too woke and now he's not going to give me replacement parts for the F-47. I'm going to be flying it without the widgets. That's the kind of thing that foreign leaders are telling me. So it's not, again, I think the whole revelation, the whole takeaway from this podcast is that you can't talk about the markets without talking about geopolitics and vice versa, because they're intertwined now more than they have ever been before, which is the value of this podcast to all of your listeners, but also all of my readers. So I think we're going to have to just keep talking, keep figuring it out together.
We hope you've enjoyed this discussion. If you want to continue following along with Josh, you can find more information on WP Intelligence at demo.wpintelligence.com. You can also follow Josh on LinkedIn, X, and Instagram using the handle at Josh Rogin. That's spelled JOSHROGIN.
We hope you enjoyed today's episode of What's Next for Markets. You can subscribe to the show on Apple, Spotify, YouTube, or wherever you get your podcasts. Be sure to follow Michael on X at Michael Kantrow. If you like the show, please let us know by leaving a positive review. The preceding commentary is not financial advice. You should always seek appropriate financial advice from a professional financial advisor in your state. You should not consider this as a substitute for these services. Piper Sandler does and seeks to do business with companies covered in its research commentary or coverage. As a result, investors should be aware that the firm may have a conflict of interest that could affect the objectivity of this commentary. Investors should consider this commentary as only a single factor in making their investment decisions. For full disclosure information, visit www.pipersandler.com/researchdisclosures.